Psychological levels can act as support and resistance, and today we are going to be looking at them and see how they can help us in executing our trades. Ladies and gentlemen, welcome to the Crypto Trading Bootcamp, and I'm so happy for this other presentation that we are going to do. Now, under psychological levels, we are going to be looking at the following things that you need to know before we end this very section. Now, you are going to learn about what are psychological levels in trading. You're also going to learn about how they affect price of trading instruments. You should clearly understand and know how do the psychological levels affect the price of trading instrument, and then you should know how to plot and use them on your chart. So we are going to be looking at these under psychological levels, and I'm so pampered to present to you. Otherwise, just sit down and you understand what psychological levels are and how you can use them in actually executing your trades. Now, what are psychological levels? I don't want to really waste time. Psychological levels is a price. Psychological level is a price level in technical analysis. Psychological level is the price level in technical analysis that significantly affects the price of an underlying security, commodity, or a derivative. Now, we are going to be using psychological levels to trade crypto. We are going to use it to trade forex. We are going to use it to trade stock. But we are saying that psychological levels in technical analysis, this is a price that significantly affects the price of an underlying commodity. Now, if you have not understood, let me explain it to you clearly so that you can understand. Now, I want to explain psychological levels by telling you, for example, if you had gone to the market, if you had gone to the, assuming you had gone to the market, and I'm going to explain to you what these psychological levels are. And now, assuming you had gone to the market and you had gone to buy, let's say, you had gone to buy a shoe to the market. Now, when you reach the market to buy a shoe, they told you that this shoe is $25. They told you that this shoe that you want to buy is $25. Now, psychological levels in trading come at the verge of negotiation. If that stuff you are buying is negotiable, or what you are really, because once we are trading, there is no fixed price for the stock, crypto, or the forex that you are trading. We are always trading things that are volatile. Their prices are changing. So I want you to think about negotiating when you are going to the market and you have gone to negotiate, and they have told you that the price of the shoe that you want to buy is $25, but negotiable. Yes, negotiable. You can negotiate. Now, you as an individual, how much are you going to start with? What is going to be your offer? How much are you going to start negotiating at? Okay. Now, let me try to guess what you are going to. If it was me, and I'm also guessing that even you'll be thinking at starting your negotiation at $20. I don't know if I'm right. You'll start your negotiation at $20. Yes. Remember, the asset is negotiable. So you start at $20. Someone is going to start at $15. Some people start at $15, but of course, once they mention 25, someone is going to be thinking at $20. Can't I give you $20? The seller is going to say, no, you know what? You give me $24. You give me $24. Let me subtract for you $1. And then for you, say no, let me add $1 and give you $21. No, the seller will be saying no. Give me actually, let me get for you. You do what? Okay, let me say, you also keep on negotiating that let's get it at 23, and maybe both of you agree that okay, we get it at 23, or else both of you agree that you're going to get it at 22. So I know those who are thinking, they are thinking about these other numbers psychologically. These are the numbers that you guys were thinking about. So for me, I would start my negotiation at 20. Someone would be thinking about at 21. But again, as for you are thinking about these psychological levels of your buying, the seller is again looking at higher prices. He wants you to buy at higher prices, but you can also see where the seller is negotiating at. Now, where do psychological levels come in? This is what you are supposed to understand. Ask yourself, if I told you that you negotiate for this commodity of $25, why didn't you say that you are going to negotiate it at, or you are going to be buying it at 21? There is no one who thought about that. I'm going to negotiate at $21.52. $21.52. No one thought about that. Even no one thought about that, I'm going to be buying it. I'm willing to buy it at $20, $20 and and 5 cents, $20 and maybe 1 to 5 cents, 1 to 5 cents. No one thought about this, right? No one thought about this. Actually, even the seller did not think about that. No, do you know what? Let me subtract for you 5 cents, and you give me $24 and 5 cents. Even the seller did not think about that. Why? Because it is psychological. Psychologically, we human beings, we don't like to think complicated things. Like these decimal points are giving us complication. These We like to think, whenever we are talking about numbers, we like to think about random numbers. We like to talk about random numbers. What we mean by random numbers is like the fixed numbers. So random numbers can be like 1, 2, 5, 5. We like to talk about these common random numbers, 5, 10. You can see these common random numbers, like we can talk about them easily. So here there was a difference of one that people could talk about them. Now, psychologically, when you go to buy something, you find that you are not going to be negotiating at these levels here. You are not going to be negotiating, but these numbers exist. Not that they don't exist, but they exist. But psychologically, your brain is actually just normal. It is just normal for you not to really think about negotiating at these decimal points. You are going to be thinking about at whole numbers. Now, how does it come to trading? Now, psychologically, you find that the highest price that we had for this, the highest price that we had was 25, and then the lowest price that we had, let me change my card. So, okay, the lowest price that we had in this negotiation, or that every trader was thinking, and most of the traders were thinking about, is $20. You understand? So we say that this is the highest psychological level and this is the lowest psychological level. That means that as traders want to trade, for the sellers that I want to sell, sellers want to sell at 25. Sellers want to sell at 25 because psychologically, that is the highest price they can get. That is the highest price they can sell their commodity psychologically. Then buyers will really want to buy at 20. Buyers will be buying at 20 because they know psychologically that is the lowest price they can buy that commodity at that particular point in time. So how does it affect the price of our commodity? It means that when the price reaches here at 25, for all those who have been having this commodity, they are going to be selling it because they know that is the highest price they can sell their commodity. So they are going to be selling their commodity. It means they are going to be supplying a lot and the demand is going to become less. Therefore, it will drop the price back to this. It will drop the price slowly. Please, the price is dropped slowly up to this very point here. So when they drop up to 20, you find that psychologically traders are thinking that that is the lowest price they can get that asset at that particular point in time. So traders are going to be buying because they know that that is the lowest price they can get. For example, if the shoe was $25 and then someone is saying, now the shoe, okay, I've subtracted $45, I'm going to give you $20. As you are still thinking about it, traders many people are rushing to buy it. So as the seller sees very many people are buying and the number of shoes is getting less in the shop, he's going to increase the price to go back to 25. You understand? So there is demand here, and that's how it is going to be affecting the price. And that's why you find that the psychological level is becoming as our resistance, and this other psychological level is becoming our support. For this, if you did not watch the class where we talked about support and resistance, please make sure you get that class and you learn about how support and resistance works. So I was just trying to explain how psychological levels really affect the price. Now you need to know that these psychological levels are random numbers, but they are going to depend on the price of the asset that you are dealing with. Now I can't list all the psychological levels. It will depend on which price you are trying to deal with. For example, now we can have one, as I try to list some of them. We will have 1, 2, 5, 10, 10, 10. We can go like yes, this is one time one. We add 0 here. We can go to 20. We can go to 50. We can go to 100. Like prices will be intervals of this. We can go to 100. We can go to even 1000, interval of 1000. What I mean by interval is here we are having interval of what? Interval of 1. So this one can be a psychological level, this one can also be its own psychological level, this one can also be its own psychological level. I'm going to show you on the graph how we do it. But these numbers that I'm listing are very important. So here on this other side, of the decimal point, you can have 0.1, you can also have 0.1, you can have 0.2 as the interval, 0.2 as the interval, you can have 0.5 as the interval, 0.5, you can have 0.01, 0.002, 0.005. Yeah, depending on the asset that you are trying to trade. So depending on the asset that you are trying to trade, these numbers can be your intervals that you are going to be able to define your asset. Now, you might be trading an asset that has 4 decimal places. Here I've been giving 2 decimal places. For example, you are trading an asset that is the price is 0. Let's say 1, 2, 3, 5, 0.1235, and you are trading in those decimal places, especially for forex and also some other cryptos that are up, their prices are so the interval we are going to take here, we are going to take 0.005. You understand? We are going to take 0.005. They have like 4 decimal places, so we are going to take 0. The interval will be 0. Here 0, here 0, then here 5. The interval is going to be 5. You understand? So you're going to be adding 5, 5, 5, 5, 5, 5. But let's see on the chart how the psychological levels are plotted and how to use them. That's what the most important thing. But these numbers will help you. Please keep them. Now let's first look at the chart. How do you use these psychological levels? So this is okay. Let me just open another chart. I don't want let me open a fresh chart. Let me just open a fresh chart and you see. So these psychological levels are very, very important. So I've opened a fresh chart, and we are going to be looking at this fresh chart and see how our psychological levels are going to work. So let me just get it to a 4-hour time frame so that we see it clearly. Okay, I've got it to a 4-hour time frame. Let me try to enlarge here and then reduce here to see my prices. Oh, I've had some supports and resistance here. I already had some psychological levels here. Okay, let me just open another graph. Let me open another graph. Let me open. Okay, I have this graph here. I think there's nothing. This graph is fresh. Okay, I have this chart here that I want us to look at its support and resistance, its psychological levels. How do the psychological levels, how are they going to work here? So for psychological levels, please, you are the one who is going to use which interval you are going to do, but make sure it is random number. Now, what you do when you're going to plot psychological levels, you come to your chart here. When you reach your chart, you are first going to look at the price of that asset that you are trying to trade. You're going to look at the price of the asset you are trying to trade. In this case, we are trading RIF USDT, and what is the current price? The current price is shown over here in green. It is 0.0026. So it is 0.0026. So we are going to be dealing with you come here to your trends. When you come to your trends, you get a horizontal line. You understand? You're going to get your horizontal line. So when you get your horizontal line, you're going to put it near this current price. Let's say yes, you're going to put it near this current price, and then I may use 0.0. I may use an interval of 0.00. 0.005. Let me see. Let me first try to see. When I plot, I click there and then I drop that horizontal line near the current price. Then I come and click on setting. I click on setting. Now when I click on setting, it is going to open for me the interval of setting. Then I need to set the price. Now what is the random number? What is the nearest random number here? So I want to remove all these numbers and I remain with 0.002 as the nearest random number. So I'm going to use 0.002. Then I click OK. So when I click OK, my line My line has come. Where is my line? I used a very big one. I used a very big one. So let me delete my line. Let me reset it to the nearest to be 0.0026, 0.002, 0.00, 0.006, 0.006, 0.006. What was the initial price? What was the initial price? Let me get the initial price. Yeah, yes. So the initial price is 0.0026. Okay. Now I'm going to use 0.00. It is almost, oh, this one is too big. It is almost 1 2 3 4 5 6, almost 6 decimal places. I'm going to use 1 2 3 4 5. I think I should use 5. So we have 0.06. Yes, I'm going to use 4 decimal places. 1 2 3 4. 0.006. I have 0.006. Then I'm going to plot another line here. Then that line I'm going to put it 0.007 and see what happens. 0.007, 0.4 decimal places, 0.007. Yes, I've put 0.007, and then I want to put it with the interval of 5, not 10. 0.007. I'm going to put 0.0065, 0.0065, 0.0065. I'm putting an interval of 0.005. Yes, as I told you that these decimal places, please make sure you have the same interval as you are doing and they are getting to your whole number. So there I'm going to put here 0.00275, 275. Yes, and then here I'm going to put, when I add 275 plus 5, I get 0 point what? I get 8. 0 point, this is 8. So you continue doing this if as many as possible. Even on the downer side, you can do the same. We are subtracting interval. We're dealing with an interval of 5. So you come to setting. Then this was, the previous one was 0.26. So this one would be 0.255. So our interval here was 0.00005. Yes, we are using 5. So you click there. Now you can see these lines that I've plotted here, these lines that I've just plotted, they are different. They are of different intervals. Like they are the same intervals. From here up to here it is the same, here up to here is the same, and they are leading to whole numbers. These whole numbers that you are seeing in blue here, you have 0.0028, 0.00275. So these are whole numbers that we are rounding to, the nearest numbers that prices can act to. Now these psychological levels, we use them in conjunction with other trading tools to show you where price is acting at, Now I'm going to show you that these psychological levels can work as your support and resistance. For example, let me show you just this above psychological level. You can see that this above psychological level, prices have been acting to it over here. For example, in the left hand side, you can see over here that prices have been acting in between these psychological levels. This one has been acting as a resistance for prices, resisting price from going up. Prices are coming down here and then bouncing back, coming up there, bouncing back, and this one has been acting as support. You can see that this other line has been acting as a support. This is a psychological level. It has been acting as support, and this one has been, the above one has been acting as a resistance. Now the above one was broken up and it went up, but this one still acted as a support again. So you find that when you see psychological levels, you are seeing areas of price action where price can act. Of course, I told you that not all psychological levels are going to be working, but where the most working psychological level is going to be got in conjunction with other trading tools that we are going to be seeing in other classes. But psychological levels are areas of price action. Now you can see over here that these other psychological levels has been acting also as our resistance. Prices have been getting here and then trying to come back. Prices have been getting here, trying to come back. This can act as your support and resistance. They can help you to plot your support and resistance. When I scroll to the left, I can find that also my psychological levels have been acting above psychological levels, acted as a resistance to this other movement. You can see that this psychological level acted as support. Now, when you move to our latest prices here, I want to change. This is a 4-hour time frame. I'm going to change to a 1-hour time frame so that you can see clearly what I'm trying to say. You can see it clearly. So when I change to my 1-hour time frame, I want to change to 1-hour time frame. So when I change to my 1-hour time frame, you can see what is happening. Let me enlarge clearly. You see lately what has been happening. Now you can find that this support, this other psychological level has been prices have been really, whenever they reach here, many candles are printed on the same line. You understand? Like they reached here and broke it. After breaking it, it acted now as a support again. It retested it again here. This candle broke it, and then these candles acted as a retest and gave it a go ahead. And then when they reached the area of this very candle, they rejected back. So this is acting as support, and then this one is also this candle here, this psychological level is acting as support. That's how we plot them. That's how we also use them as support and resistance, but also in conjunction with other trading tools like trend lines. So trend lines can show you which psychological level is really going to be so important. Now, as I told you that psychological levels are going to be used with other trading tools, you need to watch and understand clearly support and resistance. You also need to understand trend lines, then you'll be using them with psychological levels. Otherwise, the takeaway of this very class is that psychological levels, these intervals that we are plotting, can really vary, as I explained before. For example, if you are dealing with Bitcoin is something that is going to be going like, Bitcoin is in maybe 20,000. You are dealing with something of 20,000. Here you have been dealing with something of 0.00. So the interval of Bitcoin is not going to be 0.00. So the interval of Bitcoin can even be 10,000. You can not 10,000. The interval of Bitcoin can be, let me try to get a text. So Bitcoin its interval can even be like its interval can be 100. Actually, I like using 100 for Bitcoin, but it can be 100 or 50. You are using $100 or 50. So it means that its interval here is 100. You are going to be using 100, or you can be using 50 to round it to the next value, but I always use the interval of 100 on Bitcoin. So you should be able to know how to plot your psychological levels. And even when you are plotting your support and resistance, when you drop a support and resistance here, try to round it to the next psychological number, or the next whole number, so that you can clearly be using your support and resistance as psychological numbers. Make sure you practice drawing psychological levels, and let me see you in the next class. Peace.